Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about rocket companies, why I'm investing in their new IPO. So I hope you guys enjoy it, and overall, I hope you guys learned something. And if you have any questions, go ahead and ask them down below and I'll get back to you guys as soon as I can. Also guys, we are starting our new investing course. It's a very, very affordable price at around $35. You guys can literally learn to invest in the stock market and understand all of the basics that you guys need. Go ahead and check that out, carterfarschool.com. You guys can find that or down below. So now let's jump into it, roll the intro, let's go. Bam! Now, rocket companies did actually release their IPO today, starting at around $18 per share, which was a little under what the analysts thought. They did think it was going to be around $23 to $24, and right now that's the total price of it, so it kind of worked its way up. Now, I do think there's a couple possibilities that can happen with companies like this. IPO breakout, this is pretty much when a stock gets a huge run up during the first week or two after their IPO, and then slowly sells off to actually fair value state. So we can go ahead and look at Beyond Meat. Beyond Meat ran from around $40 to over $200. We can look at NIO, also known as NIO, went from around $5 to $12. So right now with this stock slowly going up, it has a possibility to do an IPO breakout. So I do think if you guys are going to be long-term investors in this stock, I do think that this is a pretty fair value for this stock. Now, the reason why I say that is because there's 12 companies behind rocket companies. The very first one is Quicken Loans. This is by far their largest companies that they have, and this makes up around 133% of their total net profit and their total net revenue. So I do think Quicken Loans is kind of like their bread and butter. But there's still 11 other companies that they do own. Now, they did release around 150 million shares, which isn't a low float, it's kind of a mid float stock, so it's not a ton of shares like Ford that has billions out there or Apple that has billions. It's kind of right in that middle. It's not low, high, it's kind of that middle float. Now, they're hoping to raise around $3.2 billion in funding so they can actually go ahead and grow their business larger, which is pretty much why all companies go public. Now, one thing to understand is they do have around $2.2 billion in long-term debt. Now, I do think they took this out before they went on their IPO to actually go ahead and grow their business. If I were them, I would have not taken that debt out. I actually would have went public a lot sooner and actually use their investors' money to grow the business, just like Apple or Amazon does. So rocket companies is technically in two different sectors. They are in a direct-to-customer and they are in a partner networks. So their direct-to-customer makes up around 82% of their total profits, and then partner networks makes up around 13%. So as investors, that is something to be a little concerned about because they could go ahead and hide different things, but honestly, I'm not too worried about it. Now, when you guys are investing in a stock, you guys want to make sure that you're not buying in overvalued. You want to make sure you're kind of buying in undervalued or at a fair price. I do think that rocket companies is a little on the undervalued point. Looking at the competitors, you guys can see their price to sales doesn't match up and their total market cap doesn't align with rocket companies. So with that being said, I do think that you should go ahead and take a little bit of your position, 1 to 2% of your account, and invest in stuff like this. I always recommend having a nice solid base of ETFs, bonds that kind of act as your defense in your investing portfolio. You guys will thank me later with that. But overall, I do think that this is a fair buy. And if this company continues to grow at the rate it's at, I could definitely see the stock trading in between $100 and $200 per share within the next 3 to 5 years. So with that being said, it still is a recent IPO and they could kind of be misleading their investors. So I do think, you have to understand that. And I do think that you have to understand there's risk involved. But I am willing to risk just that little bit amount to have a enormous reward. So that is it though. I hope you guys enjoyed the episode. And if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow. Take care. Bam.